In this video, I'm going to be talking about the biotech company Ardelyx. First, I'll be summing up the bull and bear points in Ticker. Then I'll be giving you access to my financial reports and my thoughts on where I think the stock is heading. Included in this, I'm also going to be sharing some leaked data about Ardelyx sales, so stay tuned for that. Okay, so let's start with Ticker where I have the bull and bear points. If you haven't already seen my videos that go into more detail on these bull and bear points, then it's probably a good idea that you watch those videos before seeing this one. Here, I'm just going to summarize them and give you my overall thoughts. And one of the big things that stands out for me is that there's a lot more bear points than there are bull points. But I don't think that this is an issue. If we look at the bull points, the great growth and the great potential for both drugs, we're looking at between 1.5 and 2.5 billion dollars, depending on analysts. But I actually think it's either going to be at the top of that range or potentially even higher. They've already said that they think that Ibisrela is going to get 1 billion, and exposure is accelerating much faster than Ibisrela. So I would expect that that would have a higher potential than Ibisrela. But all is yet to be seen. But I think 2.5 billion is actually probably a conservative estimate. And at the end of the day, all that matters in the long term for the stock price is how much profit that company is going to be making. And I'm looking at the bear points and I'm thinking, how much are these going to actually affect the profit? So my number one concern, of course, is the insider selling. And this is giving some red flags. I mean, a lot of the C-suite have been selling their shares. The CFO sold nearly half of their shares, and just recently the CMO sold a massive chunk of the shares, I think about 25%. So that's a bit worrying to me. So maybe they know something more, but the CFO did sell his shares in December. And since then, there's been two blowout quarters. So this could potentially just be that they needed the money. And then the ESRD, PPS, I mean, this can significantly affect the sales of exposure. There's no doubt about that, but it does look like the legislation is going to go through, extending that for another 2 years. And if that doesn't go through, they still have the TDAPA, and that's going to give them a 2-year window anyway of profit. And then once they do get put into that bundle, if they do get put into the bundle, then they'll still make a fair amount of profit. I mean, it won't be anywhere near the amount that they are currently making, but we're still talking about hundreds of millions of dollars. So next in the list is Ozempic reducing the market, and I don't think this is going to have a significant effect. Susan Rodriguez leaving, again, this could be for any reasons, and I don't think we should be speculating about this. Increasing expenses, now I do think this is going to have an effect on the stock price in the short term, and I'm going to be talking about that a bit more in my financial statements later. The high valuation, for me personally, I don't think it is highly valued considering the growth, and I think in a few quarters we're going to catch up very quickly to that valuation. And the fact that it's currently unprofitable, I think that this is going to be resolved within the next year. So now that we've gone through the bull and bear points currently affecting the company, I want to talk a bit about the numbers and some projections given different starting points. So if we look at the current market cap, we've got $1.4 billion. That's fallen a lot recently. That's got a stock price of $6.35. And currently the earnings per quarter are about $25 million. So I'm doing this spreadsheet by quarter because for me it was a bit difficult to make sense of it over multiple years. It's looking too far advanced to really guess exactly how much growth we're going to see every year. So I've just done it for a few quarters. The target PE ratio I've put a bit low here, I've put it 10. I did do a search for this and I came up with a number between like 13 and 18 here, but I'm just lowballing these figures to start with, and then I'm going to change those as we go. The earnings requirement for PE ratio of 10 is 140 million, so that's to reach the current stock price. So in order to have the fundamentals meet the current stock price, this is without consideration of growth, of course, we would need to reach $140 million. The last quarterly growth was just over $11 million, and the last quarterly revenue was just over $45 million. So currently I've set the growth rate to 1. Of course, again, I'm going to change this. The gross profit margin at 60% and the operational costs at 90 million per quarter. Now, currently the operational costs are only at 50 million a quarter, but they have been saying that they are going to incrementally increase that by about 20 million per quarter. And last quarter, they didn't really increase it that much at all. They only increased it by about $5 million. So I've got a feeling that next quarter they're going to increase it by 20 million, and the quarters after that, some incremental increases as well. So I think the 90 million is a fair estimate going forward. So on the right here, we've got the quarters going forward. We've got the income per quarter. We've got the income per year, which is just the income per quarter times 4. And then we have the gross profit per year. And underneath, we have the fundamental stock price that this company should represent, not taking growth into account. So given the parameters that I put in at the start, we can see it's going to take all the way until... Well, it's not even going to reach fundamental stock price until past 2027. But if we go back, there's quite a few things here I think are incorrect in the setup. So of course, I don't think it's going to grow like this. It's been growing exponentially for quite some time now. So I'm going to put in that at 1.1, which means it's growing at 10%. The rate of growth is growing at 10% every quarter. And you can see here that the numbers change quite drastically from this. And we're now expecting to surpass the fundamentals in the third quarter of 2026. Now, I still think that this is a little bit low. We can see here that in Q4 of 2024, it's only showing about 72 million per quarter. And I think this is going to be a lot closer to around 90 million per quarter. And this is where the leaked sales data comes in, because there's a Twitter handle that we know and love in the community that's been sharing some of the sales data that has been coming out. And he's suggesting in this quarter coming, we should be seeing a doubling of the exposure sales alone. That would put the Q3 figure much closer to 65 and the Q4 figure much closer to 90. So in order to get closer to that figure, I'm going to change this value to 1.2, which represents 20% per quarter. Now bear in mind, because that's per quarter, that represents about 100% per year, which is of course a significant amount per year, which is why I wanted to do this spreadsheet per quarter, because I think those rates are going to change in the future. But we can see here that even with that change, the Q4 for 2024 is still only going to be about 75 million. Now, I think the reason for that is the last quarterly growth was a bit lower than expected, because there was practically no growth for Ibis Rela. And the reason for that was that there was some start of the year adjustments, but the sales from this has since recovered. So I'd actually say that should have been closer to 50 million. Cool, and we can see here it's still under 90 million, but I think that's a much fairer representation of what the numbers should be now. And we can see again that it's jumped forward, and we should expect to see the fundamentals surpass the current stock price in Q4 of 2025 now. And I still think there's more that can be done here. So if we look at the gross profit margin, this is currently at 60%. And this represents the gross profit margin of the last quarter. But if you check the quarters before that, you can see that the gross profit margin has been improving quarter by quarter. I think that they can get this to 70%. So let's try that now. And yeah, we can see here it's now surpassing in Q3 of 2025. And on top of that, let's try a different PE ratio here. Let's try 15. I think that's probably fairer. And although it's in Q3 of 2025, you can now see that the number is much higher. It's surpassed a lot further. And bear in mind, this is just over 1 year. And we're going to already see the fundamentals exceed the current stock price. I mean, this is just crazy for a growth company. A lot of growth companies are valued on a 10-year perspective. And with the growth that has been shown currently and the rate of growth of the growth, we should expect this company to way surpass. I mean, not quite double, but looks like it's over 50% there of the fundamentals. So that's if we weren't even considering growth in Q3 of 2025, the stock should be valued at nearly $10. I mean, this just seems like a once in a lifetime opportunity. This is by no means financial advice, but given all of the data that we've seen so far. We're just hoping now that the growth will continue at the rate that we've already seen it grow. Now, as we go into the future, you can see that these numbers start to get a bit more ridiculous. It's just continuing at that 100% growth rate each year, and the operational costs aren't currently increasing either. So I wouldn't, of course, take these into account. The rate of growth is going to slow down, of course, but we can see here that the number reaches $2.5 billion, which I think this company will reach. I don't think it will reach it at this time, but it will get there at some point, I believe. And you can see here that the stock price is $95. And again, I don't think this is truly representative. Their operational costs will increase, and I also think they'll probably take on new trials, which will affect their profit quite significantly. Okay, so hopefully you can see from this spreadsheet that this company does potentially have a very promising future ahead. And even if it just continues at the rate of growth it's currently experiencing, then it should surpass quite significantly its stock price just within 1 year. So good luck to all those people who are invested, and I hope it goes much further. Obviously, I'm not expecting it to get to $90, but if you look at the $40 here, you can see that they only need to turn over 1.4 billion to achieve that value, and I think that's very achievable by this company. So good luck to all the people out there who are invested. I hope you've enjoyed this video. Don't forget to check out my other videos on ARDX if you haven't already, and if you'd like to join the community at Tiki Taco, please let me know.